Welcome to English for Econ, the podcast where we break down complex economic concepts in simple English. I'm your host, and today we're diving into one of the most exciting and transformative topics of our time: how artificial intelligence is fundamentally reshaping money, finance, and economics. This isn't just about robots or science fiction. AI is already changing how you bank, shop, invest, and work right now, today.
And I'm here too. We're going to explore everything from how AI is revolutionizing traditional banking to algorithmic trading, digital currencies, and what this technological revolution means for your future career and financial life. Whether you're a student, a working professional, or someone planning for the future, this affects you.
Exactly. Whether you're learning English, studying economics, or just curious about the future, this episode is for you. Let's start with something you probably use every day: your bank. The financial sector has been one of the earliest and most aggressive adopters of AI technology, and for good reason. Money never sleeps, and neither does AI.
Right.
AI is revolutionizing financial services in ways that would have seemed like magic just a decade ago. When you check your bank account on your phone, AI is working behind the scenes, analyzing every transaction in real time. It's detecting fraud. That means it's looking for suspicious activity that might indicate someone is stealing your money. For instance, if you normally shop at grocery stores in your hometown, but suddenly there's a charge from a luxury store in another country, AI flags this immediately.
That's fascinating. So it's like having a security guard that never sleeps?
Exactly, but it's much faster than any human guard. AI can analyze millions of transactions in seconds, comparing them against patterns from billions of other transactions. For example, if someone tries to use your card in Tokyo when you live in New York, the AI system immediately flags this as unusual. But it goes deeper. It might notice that the purchase pattern doesn't match your typical behavior, or that the merchant category is suspicious. Major banks like JP Chase report that their AI systems prevent billions of dollars in fraud every year.
Wow.
AI is also completely transforming how banks make decisions about loans. Traditional banks used to rely mainly on credit scores. That's a number between 300 and 850 that shows how good you are at paying back money you borrow. They'd also look at your income, your job history, and maybe how much debt you already have. But this system often missed good borrowers who simply didn't fit the traditional mold. Now, AI can look at hundreds of data points. It might consider your social media activity, your shopping patterns, how you move money between accounts, even how you fill out loan applications. This means some people who couldn't get loans before might now qualify, but it also means the system is sometimes hard to understand.
That sounds helpful, but also a bit scary. What about privacy?
You're absolutely right to ask that. This brings us to one of the biggest debates today. There's a trade-off. That means you have to choose between two good things: better financial services versus personal privacy. The European Union has implemented GDPR to give people more control over their data, but this sometimes means less sophisticated AI services.
Right, it's not a simple choice.
Now let's talk about the bigger economic picture. AI adoption is creating what economists call productivity gains. This means companies can produce more goods and services with the same amount of resources: people, time, and money. McKinsey & Company estimates that AI could contribute up to $13 trillion to global economic output by 2030. To put that in perspective, that's larger than the entire economy of China today.
So they're becoming more efficient?
Exactly. Goldman Sachs, a major investment bank, estimates that AI could boost global productivity by 7% over the next decade. That might not sound huge, but in economic terms, it's massive.
For comparison, the entire internet revolution of the 1990s and 2000s only increased productivity by about 3%. This 7% boost would be like adding an entirely new major economy to the world. Imagine if we suddenly had another Germany or Japan worth of productive capacity.
Wow, 7%?
But here's where it gets concerning. The benefits aren't distributed equally across society. Some companies and workers are gaining much more than others. This is creating what economists call economic inequality. The gap between rich and poor is getting bigger. Tech workers are seeing salary increases while traditional workers face displacement.
Can you give us some specific examples of how companies are achieving these productivity gains?
That's concerning.
Absolutely. In manufacturing, companies like Tesla use AI to predict when machines will break down before they fail. This is called predictive maintenance and can reduce downtime by up to 50%. In customer service, chatbots now handle about 80% of routine inquiries. Walmart uses AI to optimize truck routes and inventory management, saving millions in costs. Companies that successfully implement AI are seeing their stock prices soar and their market dominance expand rapidly. Meanwhile, businesses that can adapt are struggling to survive. This is creating what economists call a winner-take-all economy. The 5 largest tech companies, Apple, Microsoft, Google, Amazon, and Meta, now represent about 25% of the total value of the entire S&P 500 stock index. That's an unprecedented concentration of economic power in just 5 companies.
So the companies that master AI technology basically dominate their markets?
That's exactly right. Think about tech giants like Google, Amazon, and Microsoft. They're using AI to expand into new markets and dominate competition. Google's AI powers search and cloud computing, Amazon's recommendation engine drives sales, and Microsoft integrates AI into every product. This raises important questions about market competition and whether these companies have become too powerful.
Speaking of technology companies, what about digital money and cryptocurrency? How does AI fit into that picture?
Great question. AI and cryptocurrency are deeply connected in fascinating and sometimes surprising ways. First, let's define cryptocurrency. It's digital money that uses advanced mathematics called cryptography to secure transactions without needing a traditional bank or government to verify them. The most famous example is Bitcoin, but there are now thousands of different cryptocurrencies, each with their own features and purposes.
Right, like Bitcoin.
Exactly. AI is being used to trade cryptocurrencies automatically. These AI systems can analyze market patterns, news sentiment, and technical indicators to make trades faster than any human ever could. Some AI trading systems make thousands of trades per second. High-frequency trading firms now dominate crypto markets, using AI algorithms that can react to price changes in microseconds.
That's incredible speed.
But here's the really interesting part. Central banks, these are the government institutions that control a country's money supply, are now developing their own digital currencies, called CBDCs. Unlike Bitcoin, which operates independently of governments, CBDCs are fully controlled by central banks. Over 100 countries are now exploring or developing CBDCs, from the Bahamas' sand dollar to Nigeria's e-naira.
What does CBDC stand for?
Central Bank Digital Currency. China has already launched one called the digital yuan. AI will help these systems track every transaction in real time, which could give governments unprecedented insight into how people spend money. This level of financial surveillance has never existed before.
Now I'm really worried about privacy again.
Your concern is shared by many economists and privacy advocates. This brings us to perhaps the most important question. What does all this mean for jobs and the future economy?
Yes, that's what everyone wants to know.
The employment data shows a complex and evolving picture. AI will definitely eliminate some jobs, particularly routine, predictable tasks across many industries. Bank tellers, data entry clerks, basic financial analysts, and even some radiologists are already being replaced by AI systems. The McKinsey Global Institute estimates that AI could automate 40% of current work activities. But this doesn't mean 40% unemployment. It means jobs will change dramatically.
That sounds scary for those workers.
It is challenging, but history shows us that technology also creates new types of jobs. 50 years ago, nobody had heard of a data scientist or AI ethics specialist, but these are now high-paying careers. The U.S. Bureau of Labor Statistics projects that data science jobs will grow 36% by 2031. New roles are emerging, like AI trainers and human-AI collaboration specialists.
So there's hope for new opportunities.
Absolutely. The key is education and adaptation. Workers who can learn to collaborate with AI systems rather than compete against them will thrive. This is why continuous learning is becoming essential. Companies like Amazon are investing in retraining workers for AI-enhanced jobs, and the concept of a career for life is becoming obsolete.
What should our listeners focus on to prepare for this AI-driven economy?
Great question. First, develop skills that complement AI. Creativity, critical thinking, emotional intelligence, and complex problem solving. These are areas where humans still have a major advantage. Second, learn to work with AI tools. Don't be afraid of AI. Learn to use systems like ChatGPT and explore AI tools in your field.
Those are exactly the skills that make us uniquely human.
Exactly. Second, stay informed about AI developments in your industry. You don't need to become a programmer, but understanding how AI might affect your field will help you adapt faster. Subscribe to industry publications and take online courses relevant to your field.
And finally, remember that this economic transformation will take time. While AI is advancing rapidly, widespread implementation will happen gradually over the next decade. This gives individuals and companies time to prepare and adapt.
That's a crucial point. We need coordinated action. Governments need to invest in retraining programs and create safety nets for displaced workers. Companies need to take responsibility for retraining their workforce. The question is whether we'll use this time wisely to help everyone benefit from AI's potential.
What a fascinating topic. Thanks for breaking this down in such simple terms.
Thank you for joining us on English for Econ. Today, we've covered how AI is transforming banking, trading, and the broader economy. Remember, understanding economics isn't just about passing tests. It's about understanding the world around you. AI will shape your future career and financial life, so stay curious and keep learning.
Don't forget to subscribe for more episodes where we make complex economics simple. Until next time, keep exploring the fascinating intersection of money, technology, and human society.